Hey, it's Michael Saul, but everybody calls me Tiny. This video is, will the banks hold on? And does it matter? This is stock market analysis for the week of June 25th, 2018. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name, your best email address, follow the instructions, confirm your email, and you'll receive intra-week updates from me. If you would like to join our Facebook group, go to www.facebook.com/groups/attackthemarkets. 3 simple questions, and you're in. All you have to do is just promise that you're not going to treat other people like jerks. Guess what? Nobody who's joined has, but just want to keep it a nice community. If you never want to miss a video that I put up on my YouTube channel, hit subscribe and then hit the bell down below, and you'll be notified when a new video has been put up. Also, if you like what you're hearing, give me a like and leave me a comment. Okay, I made it in under a minute. That's awesome. Let's look at the market. So last week, I talked about being turned away at resistance. And that's what happened at the 78.6% retracement of this swing down here, from the high down to the low. So last week, what we did is we found some support at the 50% retracement of this small, right here, this little small swing up. And then if you notice, I also have a bigger swing up from down at the May low. There's support underneath at the 62% of the small one and the 38% of this larger one. That swings I'm talking about when I say, when I'm talking like that, okay? That comes into the top of about 270, 220, and then it bottoms out at 271.77, and there's also the 50-day moving average. That's what I'm looking for if we continue to go lower. I think there's a good chance that short term we are going to see lower prices because we really couldn't get out of our own way last week. We had a nice reversal on the 19th, and then after a gap up and a close below the open on Wednesday, Thursday and Friday were really nothing to speak of. Right? It was an up day, but it was more of an inside candle. And it looks like we're trying to sit here and we will probably try to poke through. Now, I do not believe we go into a prolonged correction. I'm not a bear. I don't think we get a huge pullback. I think we're going to new all-time highs. Doesn't in the S&P and the Dow. We've already been there with the NASDAQ and the Russell and the mid-caps. But that doesn't mean we can't go down a little bit more before that happens. If we do go down, I am going to be watching for a reversal candle or a small reversal pattern, whatever it is, at that 50-day moving average and these Fibonacci levels, and I am going to be looking to get on board there for a possible long side entry. Okay, that's what I'm going to be looking for. Doesn't mean it's an auto buy there. Doesn't mean I'm using the 50-day moving average as my trigger. That's not what it means. Okay, I'm going to be observing price action there. I get it. Sometimes I'll get an email from somebody that'll say, you know, Tiny, you're on the fence. Of course I'm on the fence. It's the market. I know everybody wants absolutes. Guess what? If you haven't figured it out now, I'll clue you in. There are no absolutes. All you're trying to do is stack the odds in your favor and make an appropriate decision based on those odds. Okay? So, I am looking for further downside. I am looking for that 50-day moving average to come into play, and then I'm going to be looking for a pattern to play off of there. Here's the Dow. Dow has the 200-day moving average coming up, so we want to look at that, see if that holds. The Russell hit new highs once again last week, but has started to pull back. Watch the 20 EMA. Perhaps it goes even deeper than that. The mid-caps, they hit new highs 2 weeks ago. They're pulling back. They've held the 20 EMA so far. And then you got the NASDAQ also hit just a small intraday new high, but has also pulled back. Again, I don't see a short signal here, but I'm not rah-rah-rahing here looking to buy just yet. I'd like to see a pullback. Or maybe these pause, the Russell and the NASDAQ and the mid-caps, they pause while the S&P pulls back a little bit, and then you can look for relative strength that way. Okay? All right, semiconductors. Now, Semiconductors, they came out the downside of their coil. I'm watching the 50-day moving average here as well. They didn't hit the new high before doing this, so they're showing some relative weakness, and that absolutely is divergence. All right, when the NASDAQ is up here and the semiconductors are not confirming, it's not a short signal, but it's definitely something to pay attention to. KLA tanker, yeah, below the 200-day moving average here. I mean, last time it went right back above it in a couple of days. The time before that, it did the same thing. So I'm not freaking out thinking it's a short here, but you always got to pay attention when this happens, because sometimes it's just too much, right? Sometimes it's the last straw breaking through that 200 at least the last time for the foreseeable future, and it changes trend. It goes into a downtrend for a little bit. But right now, it's just sideways, and it's, even though the 200-day is at a sharp angle here, it's more just a sideways consolidation right now. NVIDIA. So NVIDIA is getting a little grief because of people. I read an article that's saying NVIDIA is overblown because a lot of the cryptocurrency mining, and since Bitcoin's now out of favor and on the skids and everything, NVIDIA may seem some weakness. Look, NVIDIA it's more than just the cryptocurrency play on this. Okay, it's obviously been an extremely strong stock. Watch the 50-day moving average. It had a couple of crappy days the end of last week. Watch the 50-day to see if that comes in and holds as possible support here. I don't have a short signal on it right now. Intel below the 50-day, a little coiled up. I mean, I guess you can watch to see if it loses 52 if you're really looking for a short-term short. Again, I don't know how long it will go, but it did pop out and then came back down through this pattern. So again, I'm not really looking to short these, but if you're looking for short-term trades, Intel on the short side may be one to watch. Of course, you want to see the market confirm, right? Because just because I'm looking for the S&P to continue lower doesn't mean that it doesn't just, see you later, and just turn, right? The dominant trend here is up, and my dominant opinion is that we are going to all-time highs. I just think minor and the smaller swings that we're going to go lower, that perhaps we're going to go lower first. Here's ADI. ADI looks like it could be in a bull flag here. Here's MU, similar. All right, we're going to skip the banks for now. I'm going to get there. I want to talk about the broker-dealer. Been sideways for a while. It came out of its consolidation here. That in and of itself is not necessarily a short signal, but it's certainly not looking super strong here. I just don't see it as a short, right? Here's Goldman, who's more of a bank, and Goldman is looking crappy. Goldman's looking like if it gives this little double bottom away, it could get a nice drop down to the 215 area. Right, here's Morgan, also really not looking good. Here's Interactive Brokers, looks like it's headed for the 200-day moving average. All right, now let's look at biotechs. Just remind me, we got to go back to banks. Yeah, like you're going to come through the video and remind me, right? So the biotechs, they hit new highs here, relative speaking, right? And they've been pulling back. Watch the 20 EMA. Here's Amgen. They're not really in a rush to go anywhere. Here's Immunogen, right? Looks like it's starting to perk up. It's a cheapy stock. See if that can hit highs if biotechs stay firm. Here's Gilead. Again, can it get to the 200-day moving average? Here's Biogen, right? Give it a couple of days to figure out what it wants to do and fill a coil. And form a coil if it's going to. Here's the banks. So the title is, will the banks hold on? Because the banks came down, they just missed the 200, they tested them here, they tested them here, they tested them here. Are they going to finally go through, and will it matter? So, of course it matters. The banks are a leading sector. They are an important sector. Financials are an important group. Okay. However, I don't know if the banks breaking through the 200-day is going to start an avalanche or not, and if it's going to hold or it's just going to break through and then remount. The challenge with bull markets when you're trying to short, right? It's real easy saying, just buy every pullback, buy every pullback. First of all, it's not that easy. But trying to short during a bull market is much, much more difficult because what looks like, it's breaking support, we're going. Those are great in hindsight, okay? But when you're at the right edge of the chart and you're trying to see, okay, is this the spot to short? A lot of times they will be fake outs. For instance, here. Granted, now, shorting the banks in and of itself, unless you're doing it with options, whatever, but and we can look at Bank of America in a second. Right? So something like this, boom, yeah, you would have made a couple of bucks if you swung it for a couple of days, but would you have been able to get out in time to even capture the profits? Because if you look at something like this, which was an inside day, why are you covering there? It's just a pause. And then by the time it gets up here, you're basically giving it all back. So I'm not saying that it's not going to matter. Of course it's going to matter, and it could weigh heavy on the broad market. However, maybe it breaks down, which it looks like it's going to do, and then it remounts. Let's use Bank of America as an example. Bank of America is sitting right here on the 200-day moving average. If it gives way, look for it to come down to the 27s or down here to the 26s, right? And look what it did here. It broke down, and then it formed the inside day here. Let me blow it up for you. The little inside day, and then boom, by the time you go back to manage your position, you're already back to basically break even. So that's the challenge with trying to short on, in bull markets. And of course, if this is the high and Bank of America is going to $8 from here, we're all going to look back and go, oh, how'd you miss this? So, well, you missed it because we're in a bull market. Right? That's how you missed it. Anyway, if you're looking for a short side opportunity, this is one you can watch. You just got to use your stops. You always have to use your stops, but you really have to get tight. Okay? Amazon. Yep, pulling back from all-time highs. Can't believe it's not at 2,000 yet. The Apple. Watch the 50-day moving average. Alphabet. New high. Now it's pulling back. Watch the 20 EMA. Zuckerberg. Yeah, just a monster. Privacy issues. Yeah, nobody cares anymore. There it is. Boom, 30-something% from there. So watch it to continue to just flag and move. It doesn't look like a short to me. Netflix. Somebody told me that Amazon Prime is going to be bigger than Netflix. Maybe it will. It's going to forget about being bigger. That statement is a matter of opinion. But somebody told me, oh, it's going to just destroy Netflix. Yeah, I don't think so. I don't think Amazon Prime's destroying Netflix. I think they can coexist. Maybe I'm wrong. Nobody thought Netflix would destroy Blockbuster, and it surely did. All right, Caterpillar. Yeah, Caterpillar. Got to watch it. Got to watch it here. You can draw this channel line in, and you can see. But again, you want to watch that for potential support. But if it gives way, you do have a gap fill down here at 130.250. Here's John Deere. Not looking as weak as Caterpillar. Weak is a tough word, but relative speaking, I take that back. All right, very good. They look about the same. Weak is a tough word to use. They definitely don't look as strong as they have. Okay? Bonds. Bonds still trying to figure themselves out. They're in a triangle now. See what they're going to do from here. Gold. Yeah, gold getting smacked a little bit. The miners, yeah, holding up better, though. So that's something. Maybe that's saying that gold is close to potentially finding a low. Again, I'm not looking to be a buyer down here, but let's throw the Fibonacci in. Or as my friend used to call it, the Liberace, when he used to make fun of it. And then 6 months later, he was like, well, I ran the Fibonacci grid. I said, oh, the Liberace. Okay, very good. Then they realized how powerful it was, right? They all come back to the technicals in the end. All right, very good. Hold on one second. So it held the 78.6% retracement around 120. So if it loses this right here, I'm looking for a full retracement down to the December lows in gold. So watch out there. Oil, wow, nice day on Friday. Is it going to go back to highs? Is it going to get to 15? Sure looks like it for now, but it does have a gap to fill. Recap, I think we're going lower on the short term. However, my bigger picture, the main dominant opinion is obviously up, but my main dominant opinion is that we will go to new all-time highs on the S&P and the Dow and join their sisters, the mid-caps, the small caps, and the NASDAQ. But for the time being, I am looking for short-term downside. Watch the banks. The banks look like they are ready to break their 200-day moving average. Bank of America in particular, I didn't even look at the other ones. Here's JP Morgan's already below the 200. Citigroup has been lagging. But I see why I like Bank of America so much is because it's right at what I call a key decision area. So it ain't staying here, right? It's just not staying here. It's going to go one way or the other. And maybe it's going to reverse and just explode to the upside. Fine. But if it drops to the downside, this could be worth a few points. Bank of America doesn't move like tech stocks. So you get a couple of points in this. Hey, it still could be a 10% move. It could be an 8%, 7%, whatever. So, and especially if you're long, not a bad idea to look to protect. Okay? Anyway, I'm looking for short-term downside here. Of course, I'll reevaluate if it gets deeper. That's why you should be on the the intra-week update list at attackthemarkets.com. So I will talk to you via email or in next week's video. Don't forget to give me a like, hit subscribe and the bell if you want to get notified when I update videos. And, of course, like I just said, join the email list. If you have any questions in the meantime, tiny@attackthemarkets.com is the best way to get a hold of me. Talk to you soon.